So it's definitely important to know each one of your margins as it relates to the services that you're providing, because it's really going to tell you a lot about your business and where you want to put the most of your focus into. Hey, what's up everybody, and welcome back to the channel. If y'all are new here, my name is Jordan Dewey. I'm a business analyst, and today we're going to be going over this profit and loss statement, and we're going to be making small changes here and there to show you how these small changes can translate into real world profits. Okay, so first things first, you can't actually make any of these changes without knowing what your numbers are. So, you can do things here and there in your business, but you're not going to really know how it affects your business unless you're tracking this type of information. So just to go over this P&L, this full disclosure, this is my junk and debris removal business that I have, but these aren't my actual numbers. The only thing that is correct are my margins. So these are my actual margins, but the rest of this information here is not correct. So first thing we're going to look at is, okay, so we have our income up here, got a few different income sources coming through. We have our cost of goods sold that are, expenses that are related directly to producing this income. Then we have the operating expenses that, are required to operate the rest of the business. Different things like that. Accounting, advertising, all these different types of things, phone, all of that. That's all included. Because we want to get to the bottom of what kind of profits are we actually going to make. And this is for the entire year of 2023. So if you don't know these numbers, that's the first step. And I use this accounting software called Wave, W-A-V-E. It's a free software that I've been using since 2018, and it gives me all the different reporting and things that I need to be able to see the types of changes that I need to make to my business. Okay, so the first thing that we're going to look at is our income streams here. So we can see that, 75K from the cleanups, 303K roughly from the parking lots. So we can kind of see which services are bringing us in the most money, but we can definitely break that down from a percentage level and see, okay, so we've got 75% coming from the parking lot cleaning, 19% coming from the one-time cleanups, and then 5% coming from the pressure washing. But one thing to note here is that, we might be making a lot of money from these parking lot cleanings, but if we're spending, say, 290K to our contractors to fulfill this, to make this money, it's really not a good thing that we want to be doing. We might want to be pivoting into some of these other services. Similarly, if say our pressure washing, we're making roughly 20K a year with pressure washing, but we're only spending $1,000 to make that 20K, we may want to lean pretty heavy into this. So it's definitely important to know each one of your margins as it relates to the services that you're providing, because it's really going to tell you a lot about your business and where you want to put the most of your focus into. So next thing up is the cost of goods sold. So this is the money that we're spending to directly make this revenue here. And we can see that contractor expense is 99% of my COGS, which, is not surprising to me because I am heavily contractor focused. I don't have any employees, so everything goes through my contractors. I had this landfill expense here, and that's because in the beginning of the year I was still doing some of this, so that's why that's there. But we can see that, gross profits, it's a pretty nice gross profit, and we've got 60.4% gross margins. I'm not exactly happy with that number, but that is something that I'm working on, and I'm tracking my numbers more closely to increase that number. And we're going to see towards the end of the video how even just minor increases in our gross margin could lead to heavy profit increases. So next up is, and by the way, going back to this gross margin here, this is a average of our, so we have all of our incomes that are coming together, and then all of our expenses coming together, our COGS anyway, and then it's giving us the total cost, and then we're getting the gross profit from there. So we're doing this gross margin based off of all of our services and all of our contractor expenses. So we're not, all of our COGS. So we're not differentiating these services. This is just giving us an overview of the business in general. Next up, we have our operating expenses. So I have each one of these broken down, and then the percentages here. And just looking at this, we can see that, insurance is a big part of it. Of course, I have, workers' comp. So a lot of that is going towards workers' comp, plus commercial insurance for my vehicle. That's a big part of it as well. And you can see that my vehicle expense is a pretty big part. I had 2 trucks. Now I'm down to 1. But again, these are my hypothetical numbers. These aren't my actual numbers. So, but even though this is still a very high percentage of my operating expenses, and I'm actively knocking that down a little bit, because I realized it. I didn't realize at first how big that was, but now that I have that information, I can make the changes and make the business better. I work with businesses often who don't have this information at all, and it's hugely helpful, because I didn't know these things before I started actually looking into it. And now that I know them, I'm able to become a better business owner and a more profitable business owner as well. This is how you go from being good to great. You know your numbers. So, and then my total operating expenses, and then my net profit and my net margin. I'm decently happy with this net margin. I was working with a landscaper a few weeks ago, and his gross margin was 20%. 20% is an extremely low gross margin. I understand that he's very labor heavy, but so am I. So for him to have 80% of his revenue going towards his cost of goods sold is not good. That doesn't leave you with very much room to cover the other operating expenses in your company. And then, at that point, okay, you can still survive off of that, but you have to have the volume through these to make up for that, and be able to pay for the rest of your expenses. Because for the most part, some of these expenses will stay static and won't really grow. So as you get more and more income coming in, even though you're paying more out to your COGS, you're still going to have a higher volume of income coming in to be able to cover your expenses. And so when meeting with that landscaper, we were able to identify that the grass cutting portion of his business, he was bringing in a lot of income from it, but his margins were extremely low with it. He's having to pay out a lot to his contractor, or to his employees rather, to be able to make that income. Whereas if he were to lean more heavier into the landscaping portion of his business, he's able to command a higher price point from his clients, so that he's making more money in that perspective, and then he's still paying the same amount to his employees. So he's just making more per job, or more per client for that income service. And I have an Excel calculator that we can show that pretty easily. So that'll be one of the videos that I have coming up in the next couple of videos. So stick around for those as well. Now, next up, we're going to be showing how this can actually translate into some higher profits for us. So I have here, we're just going to scroll across here, and give me 1 second. Okay, so now we have our current versus projected, and this is just a summarized version of what I had over here. But this is so that we can see, how little changes here and there in our business can lead to some real profit increases. So first off, let's just see that this is all the same information that I had over there on the other side. But we're going to go ahead and make some changes here. So what does a 1% increase in revenue look like? So we can see that if we increase our income by just 1%, we'll go from 403K, roughly 403 to 404K, to 407, 408K. And we can see that's a $4,000 increase. Okay, and we can also see too that our gross margin didn't increase that much. So, and that's because, our cost of goods sold didn't do anything either. So it's pretty steady from there. Our gross margin is about the same as well. And expenses are the same too. So we're left with, that same roughly $4,000 increase. Now let's come down here, and we can see that a 1% increase in our income led to a roughly 4% increase in our actual annual profits. And this number can become pretty substantial whenever we start, getting down deeper into this. Let's say 5% and see what happens. 5%, that's an extra 20K of income coming in. So if we increase our efficiency from our income to our cost of goods sold, and it's not actually even increasing our efficiency by 5%. It's just growing by 5%. It's only increasing our efficiency by roughly 2%. So a roughly 2% increase in efficiency can lead to a roughly 20% increase in our profits, which is huge. And this is the type of stuff that you really don't know about until you start getting into your numbers and seeing how this all affects your business. It's so important just to understand that, so that you can make little increases here and there, or so that you can make little changes here and there, because you can see that 5%. Can we increase our numbers by 5%? I think that we can. So this is how you break these numbers down into seeing, what are the real world applications and how can this actually affect my business. This isn't some make-believe stuff. This is real money in your pocket type of math stuff that we got going on here. So I hope this video helped y'all. If you're not doing some of this, I hope that it kind of steers you towards looking into this a little bit more. If any of y'all need help with any of this, feel free to reach out to me and I'll be more than happy to help. I'm based out of the US, but I've done business with clients as far as Canada, So if you need any type of help with this, feel free to reach out and I'll be more than happy to help y'all. I hope y'all enjoyed this. I hope y'all have a great rest of your day and I'll see y'all in the next video. Thanks, guys. So I hope y'all got a lot out of this video. If you'd like a dashboard like this for your business, you can reach out to us on our website here and in the description below. If you're wanting to level up your Excel skills, Career Principles has a lot of practical online courses that'll take you from beginner to expert in no time, and even show you how to make dashboards like this that we've seen here today. And we can personally attest to the value that they have in the Excel and financial courses that they offer. To get 15% off, all you have to do is use the promo code JD15, and that'll give you 15% off all their online courses. So thanks again, everybody. Hope you all enjoyed it, and I'll see you next time.